nightly business report.
Good evening. Tonight, when compared to February last year, Sri Lanka's overall exports, which include both goods and services, increased by 4.62% year-over-year to $1,382.53 million in February of this year. According to the industry data, Sri Lanka's tea exports fell by 1.91 million kilograms year-over-year in February, reaching 20.40 million kilograms. The Colombo Stock Exchange had a mixed result on the first trading day of the week, failing to maintain the momentum of advances from the previous week. And as investors considered possible US trade duties, Asian equities were range-bound. The Nikkei 225 was flat and the Topix was down 0.3% as Japanese markets pulled back. Good evening and thank you for joining us. Sri Lanka's total exports, including both merchandise and services, reached $1,382.53 million in February this year, marking a 4.62% year-on-year growth compared to February last year. This also represents a 2.58% month-on-month increase from January this year. Sri Lanka's merchandise exports for February this year were valued at $1,056.39 million, according to provisional data from Sri Lankan Customs and estimated figures from gem and jewelry and petroleum products. Services exports for the same month were estimated at $326.14 million, reflecting a strong 24.37% year-on-year increase compared to February last year. Cumulative total exports for January to February this year reached $2,730.33 million, marking a 6.65% growth over the same period last year. Merchandise exports during the first 2 months of 2025 rose by 3.9%, totaling to $2,109.19 million. Services exports for the same period are estimated to have increased by 17.2%, reaching $621.14 million. The services sector contributing to this growth included ICT BPM, construction, financial services, and transport and logistics. Overall, Sri Lanka's export performance continues to show positive growth across both merchandise and services sector. Sri Lanka and Australia are set to discuss the economic and maritime cooperation during the 5th round of senior official talks and the 3rd strategic maritime dialogue in Canberra tomorrow and the 26th of March. The Sri Lankan delegation, led by Additional Secretary Asoja Gunasekara, will participate in the discussions at Australia's Department of Foreign Affairs and Trade. The talks will focus on strengthening cooperation in key areas such as political engagement, economic partnership, maritime cooperation, defense education, tourism, people-to-people connections. The last round of discussions took place in 2023 in the month of June, with both sides committing to enhance collaboration in trade, security and sports. In 2023, the trade between the two nations amounted to $1.6 billion, with Australia's exports driven by education services and agricultural products. Economic ties are primarily facilitated by the Australia-Sri Lanka Trade and Investment Framework Agreement, renewed in 2023 to strengthen bilateral engagement. Sri Lanka's tea exports dropped in February with a year-on-year decline of 1.91 million kilograms, totaling 20.40 million kilograms, according to the industry data. Sri Lanka's tea exports saw a decline in February with a drop of 1.91 million kilograms year-on-year, totaling to 20.40 million kilograms. This decrease, driven by lower demand across most tea categories except packeted tea, pushed the cumulative January to February export volume to 39.77 million kilograms, down from 13 million kilograms in the previous year. The free on-board value for February was 1,737 rupees and 25 cents, a decrease from 51 rupees and 91 cents from the previous year, though it rose by $0.13 in dollar terms. For January to February period, the FOB value stood at 1,730 rupees and 34 cents, reflecting a decrease of 40 rupees and 58 cents, but an increase of $0.25. Iraq remained the top importer of Ceylon tea with a 13% year-on-year increase to 5.96 million kilograms. Russia, the second largest importer, saw a 10% drop, while Libya saw a dramatic 653% rise to 3.63 million kilograms. Other key markets showed mixed results, with declines in the United Arab Emirates and Turkey, but a rise in Chile's imports. Rising incidents of taxi scams and alleged taxi mafia activities are prompting calls for enhanced regulatory oversight in Sri Lanka's taxi industry, particularly affecting foreign tourists. Traditional three-wheeler operations often overcharge tourists, with some charging up to 4,000 rupees for rides that should cost around 1,000 rupees. In response, the government officials, including Deputy Minister of Tourism Professor Ruwan Ranasinghe, are working with various stakeholders to address these issues and standardize pricing. Efforts are underway to improve the local public transport system, including luxury buses and railway integration, to provide more options for tourists. Meanwhile, tensions between traditional taxi services and app-based ride-hailing companies continue to escalate, with over 30 reported incidents in the past 3 months, mainly involving foreign travellers. Picnic CEO Jeffrey Sofer has urged the law enforcement to take immediate action to ensure the safety of tourists and improve the overall experience. Let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. On the first trading day of the week, the Colombo Stock Exchange experienced a mixed performance, falling to continue last week's momentum of gains. Both the All-Share Price Index and the S&P SL 20 indices showed mixed results. And for further insights, we now speak with Malinta Derana from LOLC Securities.
Thank you, Vinod. The All-Share Price Index gained 33.3 points from last Friday, closing the day at 15,912.6 points. The S&P SL 20 meanwhile saw a marginal decrease of 7.5 points, ending the day at 4,759 points. Market turnover figures remained in line with the more muted figures seen during March so far, recording a figure of 1.9 billion rupees today. Today was again a volatile day for the market as both indexes got off to a fast start as trading commenced this morning, with gains of around 0.7% within the first 1.5 hours of trading. This gain was short-lived, however, and was mostly erased by continuous declines as the day progressed, before a slight rally late in the day managed to keep both indexes around their respective closes from last Friday. Accordingly, a somewhat even split among listed entities was observed when it came to the top contributors to the SPI, with CT Holdings, HNB, and Sansa Development Bank leading today's positive contributors, while the negative contributors were led by Bukit Dara, Milster Corp, and JKH. Meanwhile, the top gainers for the day included CT Holdings PLC, UB Finance Company Limited, and Amana Takaful Life PLC, while the top losers for the day comprised of Myland Developments PLC, Bukit Dara PLC, and Sarvodaya Development Finance Limited. Thank you.
The market started the week with a mixed momentum, struggling to sustain the upward trend seen in last week's ASPI and the S&P SL 20 indices. Well, with uncertain economic conditions ahead, the outlook for the rest of the week remains a bit unclear. Investors are expected to closely watch the external factors, earning reports, and upcoming economic updates for guidance. And now, for further insights on this, we speak with Imashi Sellaperuma from LOLC Securities.
Thank you, Vinod. The second monetary policy review of the year is set to take place tomorrow, and we expect that the overnight policy rate will be maintained at its current level of 8%. Given the ongoing trend of deflation observed in the February month, the impact of energy price reduction is expected to persist further, influencing economic conditions. Policymakers are likely to consider these factors while making their decision, ensuring stability in the financial landscape. Market average turnover levels are projected to remain within the range of 1 to 2 billion rupees in the coming week, reflecting steady yet low trading activity. HMB Commercial Bank and Sampath Bank have their upcoming ex-dividend dates this week and next, which could impact market activity and investor sentiment. As these dates approach, investors holding these shares before the ex-D date will be eligible for the declared dividends, while those purchasing afterwards will not. The Invest Sri Lanka Capital Market Investor Forum for the year 2025, organized by the CSC and SCC and the stockbroker industry, will take place on 27th and 28th March. And this event is expected to attract around 100 foreign investors, including nearly 30 fund managers, along with over 400 local investors. This forum aims to highlight investment opportunities in the country and encourage capital market investment in Sri Lanka.
Gold prices fell in Asian trade today, retreating from record highs as reports suggest US President Donald Trump's April 2nd tariffs would be less severe than initially feared, reducing haven demand. Spot gold dropped 0.2% to $3,018.51 per ounce, while gold futures for May steadied at $3,049.30 per ounce. Last week, spot gold prices reached a record high of $3,057.50 per ounce. Despite the decline, a weaker dollar helped limit gold losses, while broader metal prices showed slight gains, with copper rising on expectations of tighter global supplies. Gold remains near recent peaks as safe haven demand continues due to uncertainty over the US economic and Trump's tariff plans. The price drop in gold coincided with the rise in Wall Street futures as markets anticipated that the economic impact of the tariffs would be less severe than expected. Meanwhile, oil prices inched up today as investors weighed the impact of fresh US sanctions on Iranian exports against ongoing ceasefire talks in Russia-Ukraine war, which could potentially boost Russian supplies. Brent crude futures gained 4 cents to $72.20 a barrel, while the West Texas Intermediate crude rose 0.1% to $68.36. Early in the day, prices had fallen, but both benchmarks recorded a second consecutive weekly gain after Friday's close. The recent US sanctions on Iran and latest output plans from the OPEC Plus raised expectations of tighter global oil supply. Iranian oil shipments to China are expected to decline due to the new sanctions on a private refiner and tankers, raising shipping costs. However, traders anticipate that buyers will find workarounds to maintain at least some volume of Iranian oil flowing. The Sri Lankan rupee has further depreciated against the US dollar today compared to last Friday. According to the Central Bank of Sri Lanka, both the buying and the selling rates of the US dollar have increased. And let's take a closer look at how the rupee is performing against other major global currencies in today's market. Short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Korean Textile Trading Association and Brushes and Needles Private Limited have announced a strategic collaboration to boost trade and innovation in Sri Lanka's textile and apparel sector, fostering closer ties between Sri Lanka and South Korea.
The Korean Textile Trading Association and Brushes and Needles Private Limited has announced a strategic collaboration highlighted by the grand opening of the K-Textile showroom in Colombo on March 20th, 2025 at the Vertical by Jetwin Axis Towers. This partnership aims to bridge South Korea textile technology with Sri Lanka's renowned apparel industry, promoting knowledge sharing and market innovation. The showroom will offer Sri Lankan manufacturers access to innovative sustainable fabrics while opening doors for South Korean suppliers into the South Asian market. The collaboration is set to drive synergies between South Korea's leadership in textiles and Sri Lanka's strength in apparel manufacturing, boosting global competitiveness by utilizing South Korean technology. Sri Lanka's apparel industry aims to enhance its high FOB product offerings to global fashion markets. KTTA, representing South Korea's textile exporters, the B&B and Sri Lankan Premium Textile Sourcing Company, are committed to sustainability and innovation. The grand opening will be attended by government officials and industry leaders, marking a significant step in enhancing global trade and sustainability in textiles.
Hatton National Bank celebrated International Women's Day 2025 by hosting an empowering event for over 300 microfinance women entrepreneurs. The event focused on financial inclusion and entrepreneurship, featured discussions, educational sessions, and a panel on financial management. HNB's CEO Damit Palawatha emphasized the bank's dedication to empowering women-led businesses and fostering economic growth. Expert-led sessions cover topics like financial literacy, tax management, investing options, and the importance of life insurance for entrepreneurs. Central Bank's Deputy Director Kirti Dunutilaka and industry professionals shared valuable insights to help women navigate business challenges. They even reinforced HNB's commitment to supporting women's entrepreneurial journeys and long-term success. John Keells Properties has launched the third phase of Viman Jayala project, offering eco-friendly homes and modern amenities with a scenic view.
John Keells Properties has launched the third phase of the Viman Jayala project, a semi-urban residential development. The project stands out on its environmentally integrated design, with 60% of the 6 acres land development to blend with nature. The third phase will be featuring 2 and 3 bedroom homes, offering residents access to central gardens and scenic views of Jayala town. This development has been recognized as one of John Keells Properties' most successful projects. Inoka Pereira, sector head of John Keells Properties, expressed pride in the achievement of the first 2 phases. The third phase is now open for reservations, attracting prospective buyers. Interested customers can visit the model home in Colombo to view the property and make their purchases with assistance from the on-site team.
Keells has opened its first store in the northern province, marking a significant expansion in Jaffna. This new supermarket brings Keells focused on quality, affordability and community development to the region. The company has been connected to Jaffna since 2015, with its Keells Connection Centre sourcing around 200,000 kilograms of fresh produce each month. By sourcing locally, Keells continues to support regional farmers and ensure a steady supply of high-quality goods. The new store is strategically located in the heart of Jaffna near the Stanley Road and Clock Tower Junction. It offers ample parking and convenient access from multiple entrances, enhancing shopping convenience for the community. Kumarika, a leading name in natural hair care, celebrates its 30th anniversary. Since its launch in 1995, the brand has grown from a local favorite to an international success, offering a wide range of hair care products, with experts to over 15 countries.
Kumarika, a trusted household name in Sri Lanka for over 3 decades, is celebrating its 30th anniversary, having become a global ambassador for Sri Lankan excellence. The brand, known for its signature hair oil, shampoo and conditioners, has expanded to over 15 countries, with strong leadership in marketing and in Malaysia, Maldives and Bangladesh. Kumarika's commitment to quality has earned its prestigious awards, including the Gold Award for Slim Export Brand of the Year in 2019. The brand's international presence continues to grow, with exports reaching markets such as the UAE, UK, Australia and Canada. Kumarika's innovative marketing strategies, including the Hair Play campaign and personalized experiences where its mobile salon unit, have helped strengthen its local presence. The brand is also actively participating in global beauty expos, including Beauty World in Dubai and Saudi Arabia in 2025. Kumarika's success underscores its role as a culturally iconic and key player in Sri Lankan export economy. The brand is also actively participating in global beauty expos, including Beauty World in Dubai and Saudi Arabia in 2025. Kumarika's success underscores its role as a culturally icon and key player in Sri Lankan export economy.
First Capital Treasuries PLC has been upgraded to an A+ credit rating from a rating A by the Lanka Rating Agency Limited, reflecting its strong financial position and effective risk management. Well, this milestone highlights FCT's ability to meet its financial commitments and reinforce investor confidence, especially during Sri Lanka's ongoing economic adjustments. Managing Director and CEO Dilshan Weerasekara stated that the upgrade validates the company's focus on sustainable growth and financial prudence while continuing to serve clients with excellence. LRA CEO Dr. Kenneth De Silva commended FCT for its disciplined financial strategies, strong capital base and sophisticated risk management framework, which contributed to the rating upgrade. In the financial year 24, the company posted an exceptional profit after tax of 11.1 billion rupees, largely driven by trading gains from falling interest rates, while maintaining a healthy capital adequacy ratio of 17.95% in the 9th month of the financial year 25. The improved rating is expected to further strengthen FCT's market position and support its long-term growth in Sri Lanka's capital markets. Let's take a short commercial break. Global business updates coming on the other side. Welcome back to the Nightly Business Report. Asian stocks were mostly range-bound today as investors considered the possibility of less severe trade tariffs under the US President Donald Trump. The Japanese markets retreated with the Nikkei 225 index remaining flat and the Topix index losing 0.3% following weak business activity data. The Purchasing Management Index in Japan contracted in the month of March for the first time in 5 months, raising concerns about economic momentum. In China, the Shanghai Shenzhen CSI 300 rose by 0.5% and the Shanghai Composite added 0.2%. Hong Kong's Hang Seng Index was flat after reversing earlier losses. South Korea's Kospi remained largely unchanged as investors awaited a court ruling on the impeachment of President Yoon Suk-yeol amid political uncertainty. FedEx's shares fell 11% after the parcel delivery firm cut its annual forecast, fanning worries about the health of US manufacturing amid uncertainty from the Trump administration's sweeping tariffs on trading partners.
Shares of FedEx dropped as much as 12% Friday morning to a nearly 2-year low after the package delivery firm cut its annual forecasts. The move raised worries about the health of U.S. manufacturing amid uncertainty from the Trump administration's sweeping tariffs on trading partners. FedEx said it was navigating a very challenging operating environment and that weaknesses in the industrial economy were weighing on its higher margin business-to-business volumes. The company and its rival UPS are viewed as barometers for the global economy due to their involvement across a swath of industries. Shares of UPS fell as much as 4% Friday morning. Analysts have said Trump's tariffs could trigger a recession and a trade war, further hammering demand for transportation and delivery services. FedEx has been reducing costs as demand for lower-margin e-commerce deliveries from companies such as Temu and Shein outpaces higher-margin business-to-business shipments. At least 10 brokerages cut their price targets on the company's stock on Friday.
BP activist investor followed these plans to call for a vote against Chair Helge Lund's reappointment, claiming he should have offered investors a say on scrapping energy transition targets.
BP activist investor Follow This plans to call for a vote against Chair Helge Lund's reappointment at its April 17th shareholder meeting. It claims he should have offered investors a say on scrapping green energy targets. In February, CEO Murray Auchincloss said BP would slash spending on renewables and boost investment in oil and gas. That was a major overhaul of the group's 2020 strategy, which planned a 40% cut to its oil and gas output by 2030. Shareholders have not been offered a direct vote on the new strategy. Follow This won 20% support for its climate resolutions at BP's 2021 annual general meeting and 17% in 2023. In a statement, the group said, "We don't want the chair to resign. We want him to heed the message that he's crossed a governance line and retrace his steps by offering shareholders a vote." A BP spokesperson said the energy giant engages extensively across its shareholder base. More than 88% of the group's shareholders in 2022 backed former CEO Bernard Looney's plans to cut oil and gas output. Most of these goals have been all but dropped, raising complaints from other shareholders that they were not given a say. While climate-focused investors are unhappy at BP abandoning most of Looney's plans, BP's share price has shown that the 2020 strategy had failed to convince a broader investor base. Over the last 5 years, BP's shares have risen around 88%, while Exxon has soared 246% and Shell 168%.
Well, that's all from us at the Nightly Business Report for the day. We will see you again tomorrow with the latest updates in the business loop. Until then, I'm Vinod Vanasuriya. Thank you very much for watching and have a good night.